So you just got your first job and you made that $1,000. Congrats! You should definitely go celebrate. But after you're done celebrating, what are you going to be doing with all that money? Well, a smart place to put it that a lot of people tell you is to invest it. Investing can be pretty intimidating, especially if you're just getting started, so that's what this video is about today. So in this video, we're going to be going over how to start investing, what types of stocks or bonds you could be buying, and also what kinds of accounts you might run across, and just in general, what to do with your money. So let's get started. Hey there, welcome to Venture with Jazzy. On this channel, I talk about personal finance and credit cards. And if you like the video, please leave a thumbs up and consider subscribing. So to get started, let's answer the question of what is investing? So investing is a process where you put your money into various financial assets with the expectation that you're going to be getting some profit. In some ways people invest include in stocks, bonds, real estate, and more. And if you're doing it right, hopefully at the end of it, you're going to be getting more money than what you put in originally. And also another reason why you may want to invest is due to how inflation works. Instead of letting your money sit there and potentially be devalued, you're going to want to catch up with inflation, put your money into stocks or bonds or even a savings account, and hopefully it will catch up or surpass inflation. So with that, we can now get into how to actually start investing. So to start investing, it begins with the money you have at hand. So hopefully you have some cash with you. And then of course you need an account to start investing. So let's talk about some important accounts that you'll probably run across. One investing account is the Roth IRA. The Roth IRA is a pretty special investing account where you can open one as soon as you start making an income. So if you just got your first job at age 16 at a McDonald's, well, now you're eligible to open one. And what makes this account special is there are tax advantages. So to start, you won't be taxed on any gains that you make through the stocks that you buy in this account. And normally for a lot of investment accounts out there, you would be taxed on any gains that you make with stocks. And then for Roth IRAs, there are contribution limits. So to talk about that, if you're under 50, you can contribute up to $6,500 a year. And if you're over 50, that number is $7,500 a year. And for me, I tend to divide up that number by 12. So 6,500 divided by 12 is about $542. So I like to auto move out that money from my checking into my Roth IRA account. And then from here, I would just be buying stocks at regular intervals. And to open a Roth IRA, it's relatively simple and it should be free, and you can open it at pretty much any financial institution. For me, I chose Charles Schwab, and all you have to do is basically fill out an application and boom, you have a Roth IRA account. And finally, once you do have that Roth IRA account and you transfer money into that account, don't just let it sit in cash because that's not the point of this account. That's not how your money will grow. You will actually have to buy stocks or bonds with the money in this account, and that's how you will actually be investing. So near the end of the video, I'll talk more about stocks and bonds and how that whole thing works. Another type of account is a 401k. So 401ks are typically given to you by your employer, and a lot of times they do match the contribution that you are making. And there are actually two types of 401ks, and both of these have tax advantages. They just work a little bit differently. So let's talk about them. So for one, you have a traditional 401k where the employee basically puts in the pre-tax money into this account, and then you can buy the stocks. And when it's time to take out money from this account, then you will be taxed on these withdrawals. And the second type is a Roth 401k. So this kind of works the opposite in terms of taxes. So when it's time to contribute to this account, the money you contribute is after tax income. And then you can put your money into stocks and bonds. And then when it's time to withdraw the money, it won't be taxed. And sometimes your employer will allow you to contribute to both of these types of 401ks. You can kind of split the money, and that just helps you to be a little bit more diverse. So the choice is yours. And because of the whole reason that your employer can match up to the certain percentage that you are contributing, for that reason, I would prioritize contributing to my 401k if I don't have enough money to contribute to both the 401k and the Roth IRA. So for example, if your company does 100% match up to 3% of your income and you do that 3%, so let's say you make 100k and then you would have to contribute $3,000 $3,000 a year, then your company would also contribute $3,000, and by the end of the year, you'll have $6,000 in this account. So that's essentially doubling up your money. And then of course, there are contribution limits for 401ks. So if you're under 50 years old, you can contribute up to $66,000 in the year 2023. And if you're over 50, you can contribute up to $73,500 per year. And then I think I already mentioned this, but just like your Roth IRA, you don't want to let your money in your 401k sit in the form of cash. But I think companies might make it a little bit easier to know how to do this, because in my experience, when I enrolled in my 401k, the company actually asked me if I want to put my money into certain stocks. So that's a really nice hint if you don't know how this whole thing works. Next, let's talk about a brokerage account. So a brokerage account is a fancy name for a normal type of investment account where you can buy stocks, bonds, and all that jazz. And I do want to mention that the way that brokerage accounts, 401ks, Roth IRAs, the way that you buy stocks, they essentially are all the same, where you just put money into this type of account, and then within the account, you go ahead and you buy the stocks. So the form of itself is essentially the same. The thing is, with a brokerage account, if you do make any gains and you realize these gains on these stocks, then you will be taxed on these gains during tax season. So to not get you confused, if you have a 20% gain in your Apple stock, but you don't sell that stock, you will not be taxed on the gains. But if you do want to sell the stock and make 20% back, then on this 20%, you will be taxed. Next up, another type of investment account is actually an HSA. So there are a lot of people that do have HSAs, and if you don't know what they are health savings accounts. So essentially, they are like an investment account, but for health. And actually, these types of accounts are pretty special because they are triple tax advantage. So the money that you put into an HSA is pre-tax money. And if you buy any stocks or bonds within this HSA and you make any gains, you won't be taxed on these gains. And then finally, when it's time to withdraw the money and use it, you won't be taxed on the money that you're withdrawing. So that's what makes this account pretty special. But then of course, you can only use this money for health reasons. Now, a lot of people get sick, people go to the dentist, they get braces, they have teeth cleaning, or they even have a baby. All of these things allows you to use this HSA account. And in America, I don't know where you're from, but our medical bills are expensive. So having an HSA account is really helpful, especially if you have a surprise bill, or hopefully you don't end up taking an ambulance anytime soon. So those are the types of investment accounts that you would probably run across. Now let's talk about how to actually choose a stock. So choosing a stock is pretty intimidating, especially if you're a beginner. So I'm going to be going over some less risky ways, especially when you're starting out. And as a disclaimer, I'm not a super expert in stock. I can't tell you which type of company stock you should buy, but the information I'm going to be giving you is based off of data that has been working long term. And finally, I am a relatively conservative investor. I'm not harshly putting my money in and out of stocks, so I just wanted to let you all know. So the first type of stock to discuss is an ETF. So what are ETFs? ETF stands for exchange traded funds, and essentially you can think of them as baskets of stocks. So the S&P 500 or SPY is an ETF, and essentially this one holds 500 of America's largest companies within this one stock. And what makes ETFs great is by holding all of these types of company stocks, it's essentially balancing out, making the stock less volatile, and so the risk is just way less versus putting your money into one company. And some ETFs to mention include, which I'll go by the market names, SPY, QQQ, RUT, DJI, and there's much more out there. Next up, let's talk about T-bills. So T-bills are bonds, and investing in bonds is a pretty good choice and also is less risky. Especially right now in 2023, bonds are at their 18-year high, so investing in these aren't a bad idea. So I did make a video on how to buy a T-bond, how they work, so make sure you check it out. But I do like T-bonds because you can put your money into these You can also grow your money, but if you do need to take your money out, there's no penalties and you won't get hit up with fees. So it's a relatively liquid form to put your money in. So I talked about ETFs and also bonds, but I didn't really go into different types of stocks, especially individual company stocks. So me, myself, I do put my money into company stocks, but I do my own research. And that's my advice to you all. So there's Apple, Google, Netflix, a whole ton of stocks out there, but to choose the right one is kind of difficult. So the research that I tend to do is usually watch other YouTubers. I also see how these different companies are doing and also envision if they're strong companies for the future. So by comparing all these things together, that's really what helps me to choose what type of company I should invest my money in. So that's all the talk about stocks and bonds. Let's talk about some investing methods, and for one is a really important one, which is called dollar cost averaging. So dollar cost averaging is a great method, especially for beginners, and the way it works is very simple. All you have to do is just invest in the same stocks at regular intervals with a set amount of money. And by doing this way, you'll be buying stocks at their highs and at their lows, and over time, you'll be averaging that out to hopefully make an overall gain. And how does this benefit you? Well, for one, it takes the emotion out of investing, as if you're looking at the market and seeing it go up and down, your heart also moves along with that. Also, this just lessens the mental burden because planning the market, planning when the stock goes down and buying it at its low, so then when it goes high and you sell it, it's just really hard and near impossible. So that's why I really like to do this method, especially in my retirement accounts, so then I can have relatively low risk and not have too much thought into these accounts. Next, let's talk about diversifying. So I know I talked a lot about buying SPY stock, but I also want to mention that you should not solely put your money into one type of stock, as you should probably think about diversifying your money into stocks, bonds, or even a savings account. And the main idea is to spread your money out so you can balance out risk. And finally, the most important point in this video is have a good mentality. The main idea of investing is to not get rich quick. The truth is, you're not going to be a millionaire next week. That's just not how it works. But there will be days when the market goes up and the market goes down, and just don't let your heart move along with that. There will always be a better day, so I hope you have a good mindset with this. So that's all I have for you all today. Let me know if this helped you or if you have any questions, as I love to answer them. And with that, thank you all so much for watching this video. Please subscribe if you're new, and I'll see you in another one. Bye!